Hello and welcome back to the channel, where we dive deep into the fascinating world of hard-to-borrow stocks and potential short squeeze candidates. Today, we're putting a specific spotlight on HCWB Biologics Inc., ticker symbol HCWB, a clinical-stage biopharmaceutical company that has recently popped up on our screeners. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. HCWB or HCWB Biologics Inc. operates in the healthcare and biotechnology sector, focusing on novel immunotherapies for chronic inflammation. With the market cap currently sitting at around $7.02 million, this is a microcap stock. They're developing lead products like HCWB-18, a T-cell engager, and HCWB-40, a multifunctional immunotherapy. What is cost to borrow and why it matters? Before we get into the specifics of HCWB, let's quickly explain what cost to borrow means. When someone wants to short a stock, they first have to borrow shares from a broker. The broker charges a fee for this, expressed as an annualized percentage. This cost to borrow, or CTB, is essentially the interest rate short sellers pay to hold their positions. A high CTB indicates that a stock is in high demand to short, and that borrowable shares are scarce. When fees get into the hundreds of %, it signals extreme stress in the short market. Why this stock is hard to borrow right now. Now, let's talk about HCWB. This stock has appeared on our hard to borrow screener for some very specific reasons. Currently, the cost to borrow fee for HCWB stands at an astounding 679.4% annualized. Yes, you heard that right, nearly 680% just to hold a short position for a year. What's even more noteworthy is the momentum. This fee has surged by an incredible 249 percentage points over just the last 5 trading days. This kind of rapid increase suggests a sudden and intense demand from short sellers, coinciding with a shrinking supply of available shares. Our data shows only about 100,000 shares currently available to borrow against an estimated float of 1.4 million shares. This tight supply, combined with the exorbitant fee, has contributed to HCWB's composite squeeze score of 61.7 on our internal 0-100 scale. Squeeze mechanics explained. So, what does it mean when a stock is hard to borrow like HCWB? It means short sellers are paying a premium to bet against the company. A short squeeze can occur when a stock's price starts to rise, forcing short sellers who borrowed shares at lower prices to buy them back to limit their losses or avoid further borrow fees. This buying pressure further pushes the stock price up, triggering more short covering, creating a cascade effect. The fewer shares available to borrow, the harder it is for new shorts to enter, and the more difficult it is for existing shorts to exit cheaply. Dilution risk check. When we analyze potential squeeze candidates, one of the first things we check is dilution risk. Dilution from new share offerings can flood the market with more stock, offsetting any upward price movement from a short squeeze. For HCWB, our check for recent dilutive SEC filings like SMINIS1, SMINIS3s, or 424BS over the last 90 days found no such concerns, which is a positive sign for any short squeeze thesis. Recent reverse split watch. Another important factor for HCWB is its recent reverse stock split. Just 14 days ago, on June 30, 2026, HCWB executed a 1-4-6 reverse split. Show chart with split line clearly marked. This action reduces the total number of outstanding shares and resets the share price higher. Historically, many microcap stocks tend to see renewed volatility or even a price pop within about a month after a reverse split, as the share structure adjusts and fresh eyes evaluate the new price. While this is a common pattern we observe, it's crucial to remember it's a tendency, not a guarantee for any specific stock. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For HCWB, the recent price action has been quite volatile. Over the last 30 days, the stock is down 63.77%, but it has seen a slight recovery of plus 1.58% over the last 5 days, and today it's up plus 1.81%. Volume today sits at 25,568 shares, which is significantly below its 30-day average volume of 155,439 shares, giving it a relative volume of just 0.2x. A high cost to borrow like HCWBs can indicate potential for a squeeze, but it's vital to remember it does not guarantee one. It can also signify that short sellers have very strong conviction in their bearish thesis and are willing to pay significant fees to maintain their positions. Traders will be watching for an increase in buying volume that could put pressure on those short positions. HCW Biologics Inc. HCWB presents an interesting case with its sky-high cost to borrow and recent reverse split. It's a prime example of a stock showing the characteristics we look for on our hard-to-borrow screeners. Keep these factors in mind as you conduct your own research. If you found this breakdown helpful, please like this video, subscribe to the channel for more unique insights, and let us know in the comments what other hard-to-borrow stocks you're watching.